All right, hey everybody, this is John. Welcome to tonight's free video. Markets continue to work to the upside, and I think it's really fascinating to note here how, a lot of, all of this craziness we saw to the downside. And by the way, when we got here, AAII investor sentiment reached 60% bearish, and that's only the fifth time in the history of the reading that it's ever gotten that high. And of course, every time when it gets that extreme sentiment to the downside, you get a bottom. What's interesting here is that this whole round trip, I think this is a super important level because this is where the markets were before the presidential election was confirmed. And then we saw kind of the Trump bump, and then the test, and then another push, and off to new highs. And then, of course, we got all the tariff war stuff. What was interesting about this is that I remember talking to a lot of people who had been sitting in cash for so long, is that they finally, at that moment in time, thought it would be a good time to invest. It felt safe. And the reason I bring this up is that the idea of feeling good about an investment or feeling bad about an investment is not only immaterial, but oftentimes our emotions betray us because, when something looks good, it's because you're hearing all these things on the news that it looks good. And if on the news everything looks good, then everybody that had been in it before is taking profits, okay? And just as the same thing here, I had the same people that felt good about getting into the markets here literally texting me on this day, yeah, I just got out of my index funds. Obviously everything's really bad right now, and I picked a bad time to get in. And then I think, if you do that, like with Vanguard, you're like locked out for 30 days, and it's, I think now they can finally get back in. So the main point of all this is that we want to have, there's a couple of things that we can use as guides just to kind of like let us know, like, are we behaving irrationally, i.e., emotionally, or is what we're looking at it have credence? And one of the things I really love to look at here is this combined equity index put call ratio. Basically, if it's near 0.7, it just means that there's extreme bullishness in the markets. And if everybody's long, it's kind of like there's not really a lot of people left to buy. And then conversely, if it's up here kind of near 1, give or take, everybody's so bearish that there's kind of like no one else left to short. Now, if you look at it from a human emotion standpoint, okay, if everybody's bullish here and no one's left to buy, that's the time when we sell off. And then if everybody suddenly gets bearish and no one else is left to sell, that's the time when we bottom. And on and on and on it goes. Extreme bullishness here. Okay, we just pull back, right? And we pull back to win. Oh my God, it's the end of the world. And and sometimes there's going to be some more. This thing was, I was surprised how long this lasted, but we still got the sell-off, and then et cetera, et cetera. All right, so what happened here during this time in January and early February and essentially December, kind of after the election, we were at extreme bullishness, and you'll notice here that we just really couldn't go higher. And so when you have a market like this, it just can't go higher. At some point, it starts to lose confidence. People take profits, et cetera, et cetera. And what do? We sold off till we got to extreme bearishness. And then here we go. So how this works is I'm fine with more upside until we get to, we start hanging around about 0.7 or lower for a couple of weeks. This isn't one of those things where, you touch it and it's done right away. Typically, it's a process. But we're getting there. So just based on this, I would say that we're probably not going to make new all-time highs here. But we could certainly sit here and consolidate for quite a bit, just as we consolidated for quite a bit there. All right, so that's one tool that I like to use for that. I think it's probably the most important one. Okay, so let's look at a couple of stocks here, and then I will dive into the premium video. So for the SPX, let's look at the cash index here, kind of get a sense of where we are, and we were just looking at that. So again, we got the kind of the let me mark here. Here, I'll pause this and mark it. All right, so here we go. So this is kind of the Trump bump. So about 5,700, it was been the key level. And we came down there, we tested it. We came down, we kind of tested it again. We hovered, we fell. We came back, 5,700, and of course then we just got wasted. extreme bearishness there, and then we kind of came back and we really just hovered over 5,700 for quite some time, and now we've broken through it. Pretty fantastic move. And so what we want to check here are just, I'm going to go through, well, the premium video, I'm going to go through the Mag 7 stocks just to see, like, okay, where is the leadership coming from? But we are seeing, new highs from a lot of stocks, not necessarily, the huge stocks. It was notable that PLTR broke out today, which was great. And then if we go look at something like Apple, which is obviously a super important stock, it's kind of lagging. In fact, we're still kind of hanging out well below that 200 SMA. So while there are a lot of leaders that are kind of asserting themselves here, there's, I wouldn't see the NASDAQ or the S&Ps make new highs until you see Apple really getting its act together. Now we could see, and of course the NASDAQ here, kind of the same thing. We're through that Trump, kind of the Trump bump level, which is right here, and through this downtrend line. And so this is a very significant breakout. All right. So this is where we are. At this point, 5,900 is a big level. I do think we're going to start seeing a little bit more back and forth. But even a couple people in the room today were like, man, do you think that by the end of June we're going to be back at the lows? No, we're not. That's not going to happen. Is it possible that, later in the year or maybe the same time next year, we could retest the lows? Of course. But in the short term, not only did you have, so basically if you just got to think of it this way, because I've seen this so many times, this really wasn't that real. This was, it was real for people that, panicked and, sold all their longs at the lows. Yes, that was real. But if you think of what fundamentally changed between where we are now and, here at the election, it was a lot of news and a lot of hype, and which was used to negotiate. And here we are. The world goes on. Business must go on. Those that are in, the powers that be have 1,000% vested interest that business continues. People work together and all that kind of fun stuff. And now here we are. And so now the real question is, since we're back from whence we came, as the market kind of digests this and says, okay, now based on growth and valuations and AI, is it worth providing higher multiples from here? And that's where we are. All right, I'm going to dive into the premium video. You guys have a great night, and I'll see you at the next update.
Hey, John here with Simpler Trading. Thanks for watching. If you enjoyed this video, comment down below and let us know what topic you want to see us cover next. Also, be sure to subscribe and click the bell icon so you can get notified when we release new videos. And if you want to watch us trade in real time using our own money, go to simplertrading.com and learn how to sign up. Good trading, and we'll see you next time.